Welcome to Remarkable Retail Podcast, Season 7, Episode 9. I'm Michael LeBlanc.
And I'm Steve Dennis.
In our final of 3 episodes, recorded live in Vegas at Grocery Shop 2023 in the Vantage Podcast Studio, our guest for a scintillating thought leadership panel on the future of retail, our fellow Canadian Stewart Samuel, Director of Retail Futures at IDG, and Lindsey Mazza, Global Retail Lead, Capgemini Group. Now, Steve, it is fall. The temperatures are, livable in Dallas, and they're fall-like here up in Toronto. It's a great time of the year for fresh and crisp apples, by the way. Hope you love a good apple, which, of course, turns my thoughts to the Big Apple. The city's so great they had to name it twice, New York, and the big NRF show coming up in January.
Yeah, coming up fast. Starting to look at the agenda and some of the speakers. And, of course, we'll be there as, I don't know, other than, I guess, COVID. I think I've been there 20 plus times or something. So looking forward to that. And by the way,
40,000 of our closest friends. Yeah.
Yeah. It's a very intimate gathering. So we love that. And if anybody is interested in perhaps having us speak at one of their customer events or anything like that, or even sponsoring our remote podcast studio, please drop us a line at events@sageberryconsulting.com. That's events@sageberryconsulting.com. But otherwise, we'll look forward to catching up, with our 40,000 closest friends.
Let's get into the news. So we actually had a surprise on both sides of the border around the jobs report. What did you think?
Yeah, it was. I was watching CNBC this morning, and right before the numbers come out, everybody's guessing at what the number was going to be in terms of jobs that were added, and then lo and behold, it was like twice the number that was expected in the U.S. And I guess Canada had a similar surprise.
Triple expectation.
To the upside. So the job market continues to just be incredibly strong. Which I don't know. I still can't. Part of me understands it, but some of it, in light of some of the other things that are going on, which we'll talk about in a second, still seems a bit surprising. So the U.S. unemployment rate stayed steady at 3.8. I guess Canadians more like 5.5. So higher, but I guess historically towards the low side. So as we think about this kind of big picture, the thing that is getting a lot of discussion is this idea of higher interest rates for longer. There's been this kind of pivot from the focus, if you listen to the financial types, this pivot from the focus on what the Federal Reserve and some of the central banks are going to do in terms of shorter term rates to looking at the 10-year bond rate. And that's an important number really in the context of mortgage rates, what corporations that are issuing debt are needing to refinance. There's a lot of refinancing activity that's going to be important over the next 6 to 12 months. So that rate is up about 1.5 points since the spring, up 75 basis points in the past month, and is now at a 16-year high. So on the one hand, you'd say with these higher interest rates, noticeably higher interest rates, that would tend to suggest a slowdown. And yet, here we are with a strong job market and consumers generally still continuing to spend, reasonably strongly.
Well, let's touch base. As we've said a couple of times, we're not doing a formal recap of predictions, but let's touch base on one of the predictions, the disruptor reset. Lots of information coming down the pipe on what's happening there. What are you thinking here in the fall of 2023?
So one of my predictions for the year was this disruptor reset. So we've talked multiple times about different examples of this, but this past week we had 3 big pieces of news that relates to this and supports. I think that I'm going to end up scoring myself pretty well at the end of the year on this prediction. So Blue Apron, the meal kit company that was quite high profile, had a big IPO a number of years ago. It got acquired this week by the Wonder Group, which is Mark Lowry, the Jet.com Walmart guy. Got sold for only $103 million, which is quite a fraction of its original value. So definitely a very wobbly unicorn. So we'll see what that I mean, there was some speculation that they might actually go completely out of business. So this gives them a bit of a lifeline, but at a very big haircut from the valuation they had previously. Smile Direct, which was also kind of a high growth company that did online dental kinds of services. They filed for Chapter 11. We'll see whether they're able to reorganize under that. And this actually happened a couple weeks ago. Showfields, which is one of these brands or retail formats that had a bunch of different DTC type newer brands under one roof. They announced the closing of, I believe it's their original store in New York after having closed their one of their Miami locations a couple of months ago. So that's another very hot concept that got a lot of buzz in recent years. That looks like it's hit some challenges. So we'll see where that goes.
Here in Canada, Toys R Us continues to be a fairly significant retailer coast to coast. There's some talk about the resurrection of Toys R Us. So talk about your thoughts on Toys R Us's Lazarus-like strategy.
Well, they announced they really announced two things. One is they're going to open 24 quote-unquote flagship stores. Some people said you can't have 24 flagship stores. That's not what a flagship is.
You keep using the word. I don't think it means what you think it means.
But what they are, I think they are meant to be about 20,000 square foot stores, so smaller than the old versions of Toys R Us. They've only opened, as far as I can tell, one of these format stores in the American Dream Mall outside of New York, so which I haven't seen. So I can't speak firsthand as to the strength of this. What I think is kind of interesting about it. Oh, and I guess the other thing I should mention is that they have been selling through Macy's with shops at a number of their stores. So this resurrection is a little bit actually like kind of the DTC framework of resurrecting themselves online, then doing some wholesale to build some business and awareness, and then coming in now with different kinds of retail stores, which are smaller in better real estate. So I think it's an interesting strategy. How high might be up on this kind of strategy. I'm not sure. There's so much competition in the toy space. There's lots of nostalgia for Toys R Us for sure. But what is really unique about their offering compared to what you can get online, what you can get at Macy's, what you can get at Target, Walmart, a whole bunch of other people that have really kind of cornered the market on toys. That remains to be seen. But they're definitely, under their newish owners, WPP, they're definitely putting some investment behind a physical store strategy. And they're also going to be opening some, considerably smaller stores in airports, including the DFW airport here, I think, in the next month, and cruise ships. So it's kind of that's more marketing, obviously, than large volume. But
talk about a captive audience, though. Talk about a captive audience.
It is a captive audience. Marketing. Yes. Yeah. So we'll see. It's interesting.
So JLL saying the quiet thing out loud, the luxury groups are opening a lot of stores. It's funny, we often talk about DTC and startups opening retail spaces, but there's been a transformation in the luxury retail and brand space. Talk about that for a bit.
Well, I speculated when we were talking about Neiman Marcus's lackluster performance and Saks Fifth Avenue's lackluster performance. One of the things I wondered, and I've been talking to some of my colleagues about, is to what degree has, there's one thing in terms of just the overall spending of luxury customers. And I think generally we see the very high end continuing to spend quite well, and maybe the more kind of accessible luxury customer pulling back. The thing in particular I wondered about is just the competition the department stores having more competition from their vendors. Well, this report indicated that all these high-end luxury groups have multiple brands. So LVMH has Louis Vuitton, but also Sephora, Bulgari, and a bunch of other brands. Kering's biggest brand is Gucci, but also Balenciaga, YSL, a whole bunch of others. So if you look at the store counts for the LVMH group, it's 108 new stores. And for Kering Group, it's 100. And, relative to the number of stores that Neiman Marcus has, it's like 40. And Saks is a similar number. Nordstrom's more like 95 stores. And of course, there already were a bunch of these vendor stores that existed in the market more than a year ago. It just struck me, talking specifically about the North Park Mall, which is not too far from me, is I've definitely seen in the last few years many more stores from these high-end brands, vendor brands opening, but also the relocation of stores to bigger spaces. So the Gucci store in particular, which was a relatively small store at North Park, is now like 3 times the size. So I think this is, part of this overall desire for vendors to be able to establish relationships with the end consumer, much like we've talked about with Nike and others. But it's pretty formidable competition for the more traditional department store model. So this is the first time I'd really seen it quantified, and frankly, the numbers were even bigger than I suspected they might be.
Well, let's finish the episode. Talk about earnings. So there's some earnings that came out. One of my former employees, in fact. Let's start with them, Levi's.
Yeah, this was a pretty. I was going to say it's not really mixed. It was pretty tepid results overall. Essentially, their revenues were flat-ish. The difference was that their direct-to-consumer business, getting back to this idea of investing more of vendors getting into direct relationships with their end consumer, that grew quite a bit, about 14% year over year. But their wholesale business declined about 8%. Now, it varied a little bit across the different geographies because they're a global brand, of course. Asia was relatively strong overall, but their earnings were down quite a lot. If you look at it just on a total basis, there was an impairment charge, but if you back that out, their earnings were still down. So not a lot of momentum there. I did see Chip Bergh, who's about to turn the keys over to Michelle Gass as the CEO. He was on CNBC saying that, for the most part, their wholesale customers, whether it's the more traditional department stores or whether it's Target or Walmart, they're all reporting pretty significant decreases. And I think this just is, part of the overall flight to value, focus on non-discretionary stuff as opposed to, things like, could you do without a new pair of jeans for a little bit? So, and then just quickly,
one quick comment on Levi's, and it just, if you page back in the time tunnel, back when there was an East and West Berlin, one of the biggest things that would cross that border was Levi's jeans, right? They were hard to find in the Soviet Union. And it occurs to me, we've never talked about this on the pod, that, you thanks to the Russians invading Ukraine, you've taken an entire fairly big country out of a lot of these brands' purview. Now, there may be some getting shipped in, but a lot of brands just left that market, and it's a huge market. And we don't talk about it in that context very often,
Yeah, well, there's lots of shifts. I think if you think for these global brands, growth of markets like China, but India and the Middle East, and Russia had been a pretty big market for lots of brands, which is to your point, essentially gone to zero, or it's all gray market stuff. So I don't know how significant that is to the total in particular of Levi's, but there's just a lot of shifting sands. The last earnings thing I wanted to mention quickly was Tesco. We have a nice audience over in the UK, so I'm sure both they will all know Tesco, but many of other folks will know Tesco as well. And they put together, it's nice to have at least one good positive story here. They put together a really good quarter. They had very strong sales growth, well above inflation, which, if you compare to, say, what we've seen from Kroger and some other folks, have had a harder time driving that top line significantly. And they also improved their profitability. Now, they've got a great value-oriented position there. So I think, they're really leveraging their strengths. And of course, they sell, overwhelmingly essential goods. But one of the few bright spots I think we've seen recently from the, more mass merchant grocery space.
All right, let's get to our fantastic interview done live in Las Vegas, Grocery Shop 2023 in the Vantage podcast studio with Stewart Samuel and Lindsey Mazza.
All right, well, we're back in the Vantage Podcast Studio, a.k.a. the Beach Cabana at Mandalay Bay Resort, and we've got two great guests to talk about what's going on in grocery. So maybe we'll just start with having you each introduce yourself. Lindsey, you want to kick us off?
Sure, I'm happy to. Thank you so much for having us. It's an amazing conference that we're at Grocery Shop right now, and I'm thrilled to be able to have joined you and the Grocery Shop team. My name's Lindsey Mazza. I'm Capgemini Group's Global Retail Lead. We set the market strategy for where we're headed in retail.
And just maybe quickly, how did you end up in that? That sounds like a cool job. How did you end up there?
Steve, I've had a long path of retail transformation, merchandising, and operational improvement programs. I come from 20 years of delivering consulting engagements with some of the top retailers in the world, and I'm really thrilled to be able to represent many of those retailers as they undergo their transformations now.
Nice. Well, we're going to tap into that all that wisdom. So, Stewart, what's your brief personal and professional journey?
Yeah, thanks, Steve. Thanks, Michael, for having me here. So, Stewart Samuel, Director of Retail Futures at IGD. And at IGD, I really sort of help companies to think about the future of retail. So, what's coming down the line, look out maybe 3 to 5 years with a time frame, trying to put things on the radar of retailers and CPGs that maybe they're not fully aware of yet. In terms of coming into the industry, I spent 18 years at IGD, so in a range of roles, kind of done most of our sort of US research engagement, partnership work over the last sort of 15 years, and prior to that, spent 10 years in retail as well. And just again, trying to bring that experience through to our customers.
Nice. Well, so we're recording this just for our audience. We're recording this kind of midway through day 2 of Grocery Shop, so it's a little too soon to kind of take stock of what came out of the conference, but maybe we could just talk a little bit about some conference kind of specific topics, one of which being, why do you come to an event like this? What do you hope to contribute? What do you hope to take away? Stewart, you want to take a shot at that?
Yeah, for me, the scale of the event, it's really about networking and, reconnecting with a lot of people. It's a great opportunity. It's really a magnet for, all the sort of key leaders in retail and CPG, all the sort of companies that kind of have a role or a stake in the grocery supply chain, I hear. And then you've got all the sort of exciting new startups, the innovative companies that are sort of, really sort of trying to sort of, find their way in the industry. So just sort of helping to, for me, it really kind of paints a picture of where I think retail will be heading over the next few years.
Right. And now you're going to be involved in a session. Is that right? What's the...
Yeah, I'm chairing a session on Thursday. We're going to be talking about new retail models, alternative revenue streams, and the role of data and partnerships within those. So this is, again, I think one of those sort of topics which is kind of bubbling under right now, but I think it'll be a bigger part of the industry over the next few years.
Nice. Well, we'll look forward to hearing your thoughts on that. Lindsey, how about you? What's your focus? And you've got a session as well, I believe.
To be honest, I came here to learn. I think this is an incredible opportunity where a lot of diverse, unique positions come together in one space for a short period of time. The way the meetups are organized, you're able to meet individuals from large and small organizations sharing their perspective on what the future of grocery, the future of retail has in store. You can hear everything from generative AI to retail media networks to, the supply chain technologies that are supporting it. And that diversity and rich tapestry of engagement and excitement and information sharing is a big part of why I come.
Sure. And as I mentioned, for the audience, we're just kind of midway at this point, but I'm curious whether there's anything that's struck either of you so far, positively or negatively, or even Stewart, Michael, and a number of other people, we were at dinner last night, so we had some conversations. We're not going to share any private information about that, but just, maybe things you're hearing in the hallway or from colleagues that are intriguing to you in some way. Lindsey, anything so far?
I'd be really happy to. The biggest thing that I'm seeing is that we're seeing an integration of all of the efforts that are happening in retail right now. So no longer are we, hey, it's cost out, or it's only about consumer experience, or I have to do something differently. It's I have to do everything differently all at once. And that mantra really has 3 legs to it. It has the cost out component of how we transform organizations to create operational efficiencies so that we can take cost out of the business, so that we can use that in order to engage consumers. I have to engage consumers at the same time. So it's creating this pattern of, channel growth and unification, convergence of commerce with fulfillment networks that are both the cost out and the engagement at the same time. And then the third area is we're doing that in a way while we save the world. How are we taking, sustainable benefits into the universe? How are we creating social justice and fair trade? How are we making this more equitable for all while we create a system that's convenient for consumers, low cost for businesses to operate, and for consumers to be able to buy, especially in the time of tremendous disruption that we're in right now?
Maybe a quick follow-on, because before I go to Stewart, some of those things, maybe not all of them, have been agenda topics for a long time. Is there something you think about this moment that is causing people to take them more seriously, make more progress on them?
Well, I think that, first of all, the market's changed, and second, consumers have changed. The demand from consumers and the promise that they're asking for us as brands and retailers to be able to fulfill is one above affordable sustainability. So I'm no longer willing to pay more for an item that is perceived as sustainable. I expect it to be at the same cost or below a standard product. And I think that that's a really relevant difference in the market. We're at the very first time in history where consumers are saying they won't pay more for a sustainable product.
Interesting, yeah.
But they really want them, and the demand is high for that, especially among the next generation of consumers in America. So as we look at what is coming ahead of us from a consumer market, that complexity and integration of all three areas is critical to be able to fulfill that promise to consumers, to be able to meet their demand from what they've ordered to when it's delivered, from product ideation to receipt by the consumer.
Interesting. Stewart, what's you got a few early insights at least?
Yeah, it was interesting what Lindsey was saying in terms of this broad reach of this digital transformation, because the one thing that I've really picked up on is the way that a lot of these technology companies and these startups are now being pushed to expand the scope of the work that they do. So if they're maybe starting off as a personalization engine, they're now being pushed by their customers. Well, actually, can you do something on demand planning for us? Can you do something on supply chain? Can you actually, instead of white labeling it, can you actually build the front end for us? So just this reach of these tech companies within an organization is just extending over time. And I think for a lot of the startups in particular, it's quite a big decision for them. They have to decide, look, we've been really successful, we've worked within our niche, we're experts in this area. If we go and do something else, actually we're going to be up against some maybe formidable competitors.
Sure, right.
We actually might lose that sort of halo of expertise that we have of being a very specialist company in this space. So it's going to be interesting actually to see, I guess, one thing maybe is more consolidation among those tech companies. Actually, hey, let's not go and do it ourselves. Maybe we can partner up with another startup and actually create a bigger organization that way. But actually just to see where these tech companies are going to go, particularly the way that funding is right now, and that that's harder for them to achieve. And so maybe 2-3 years ago that would have been maybe an easy decision for them. Yeah, let's go, let's expand, let's recruit a team, let's build this. Actually, those decisions are much more sort of measured and considered today, I think.
Lindsey, you laid out what a lot of work is happening at Capgemini, some big things. I wanted to delve into supply chain specifically. And whether that's learnings from the COVID era, maybe we need to be more agile, maybe it's just in case versus just in time, maybe we can't find enough people to work in the warehouse. So how do you think about these things intersecting, automation, modernization of supply chain? How prominent is that on the minds of CPG and retailers today?
It's everything. I mean, we're talking about these intelligent networks, and they are designed around what their supply network looks like. What does their ecosystem make available to them? And how can they share information, data, attributes in order to understand more about who the consumer is, as well as what product is going to have the greatest propensity for a consumer to buy at any particular time in any moment, in any location. I think that's really where we are right now, is how are we bringing together more visibility, more understanding of what the entire network has available to it. We're in this time of disruption. We have a lack of raw material availability that's impacting our ability to manufacture. We have lack of manufacturing capacity because of the demand for particular items, because of the labor shortage and the attrition in the labor area. We have an energy
And that's
transition.
probably not a short-term, when we talk about labor, I think of that as a 10-year problem. I don't think of that, or if not longer. So that's not like a short-term issue that you can just wait until there's more people. You're going to have to really invest in automation, I think, to get through it, right?
It is. It's things like visibility and understanding where all of my products are. It is things like automating the facilities themselves so that we can do faster, better, easier manufacturing. It's changing the makeup of the product so that we can get speed to market from that product. It is, understanding who the consumer is that wants to buy it so that we get it closer and create more automated fulfillment centers closest to the consumer homes. It's putting robotics in facilities that can pick, pack. It's automating delivery. The supply chain breadth is so varied and long. We're talking about going from agriculture all the way through to consumer home. And that really makes it so that there's 100 new ideas that you have to do in order to get the perfect supply chain. And what that looks like is automation all along the way, the use of analytics and especially generative AI along the way in many different areas and aspects of how you're going to improve the supply chain. The use of how we look at the savings that we can create from supply chain that then transfer into less margin erosion for other areas of the business. So I think all of these aspects are what we're bringing into play when we think about the intelligent network that is now, this movement from the linear supply chain that was more traditional to this full ecosystem of players that have to be involved.
I've heard it described that supply chain was buttoned down so tight that during COVID it just snapped, right? There's no flex in the supply chain. Stuart, let's build on that point around changes that are happening in the environment and how you and your firm think about it. I mean, I think of food inflation being driven from everything from climate change to the war in Ukraine to there's a lot of external factors that are driving this and changing what and how we find things. How are you guys thinking about that? And is that the kind of priority you guys are thinking around?
Yeah, I think the word may be overused, but it's perma-crisis, right? It's you come from COVID, came out of that. We still had the supply chain challenges, and then we had the war in Ukraine, which kind of really impacted supply, energy pricing. So retail really has to be more resilient. That's one of the big themes for us. Is how do you build resilience? And Lindsey spoke about the supply chain and all the sort of 100 of different decisions and options that retailers have in that space. You look at the front end, CRM and in marketing, there's other decisions to be made there as well. So I think the big challenge that retail finds itself at is, what do I do? Where do I prioritize? What comes first? Do I do the cost savings on supply chains that it unlocks the investment so I can do the front end stuff, or do I enhance the customer experience first and then come to the supply chain? And that's one of the big decision points that we're sort of working with clients with right now, is how do you sort of work through some of that? How do you prioritize? Where does the investment go to? Because again, it's all sort of limited as well. But retailers are really facing a tough challenge. You do have the higher labor costs, and inflation will come down. But
if you can find the people, let alone
if you can find the people, right? But that labor level, the wage cost is not going down. No one's going to work for less having had a higher wage rate. That's the cost base has reset for retail. We know the challenges with e-commerce. The tech investments, and then the other one, which doesn't get sort of spoken about too much, but net zero 2040, 2030, 2020, 2025. There's some really big deliverables coming in a couple of years, in 5 years, and then 10 years. The cost of transforming our industry to meet some of those requirements is significant. And I remember looking at some McKinsey data last year. We are way underspending what's needed to achieve some of those targets. So there's four big sort of cost elements for not just for retailers, for manufacturers, and actually beyond the retail industry as well.
And I've heard it described that retailers are focused a little more on, because we don't know what's coming next anymore, right? I mean, I'm not sure we ever did, but we certainly don't. And so more scenario planning than long-range, big 5-year plans that are just too difficult to interpret the world around us, right?
Yeah, I spoke to a retailer last week, and we're sort of just building up some models now around Store the Future, which is a big theme for us. And we talk about today, tomorrow, and beyond. And I said, what's beyond? What's your time frame? So anything after 18 months. So today is like literally today and next week, maybe next quarter. Tomorrow is 2024. Anything beyond 18 months is really off their agenda for now. Wow. And that's, I'm sure the work that you do is
change. Right? It's because there's been so much disruption. There's so much new and good disruption, so much new technology that is available to us, that the pace of change has escalated to the point where we're looking closer term for what is Horizon 3 is sooner than we ever expected it to be. And so we are preparing and laying the groundwork for those changes as they take place now, because the only way to get to that future is to start testing, start trialing, start proofs of concept in order to be able to do those things 18 months from now.
Yeah, and I was just going to build on one of
Sure.
I think the shifts that we've seen is that where, maybe 4 or 5 years ago, retailers were, really focused on doing a lot of things in-house, much more open to partnering up to do some of this and bringing more companies in to support them on that journey as well, particularly in the tech world, where there was, I think, a bit of a mentality, hey, we have to build this all in-house and do it all ourselves. And
we're so unique.
Yeah.
Nobody's got that solution.
Yeah, exactly. Yeah. And, what we're seeing now, and it's great, and I think, events like Grocery Shop really do sort of enable retailers to see the wealth and diversity of startups that are out there and the solutions which they can provide at a much quicker pace.
I echo that. I mean, we are seeing a transition from the legacy applications and the mindset that it has to be built in-house, even amongst organizations who have acquired many different banners under their teams, where it has to come from here to we're partnering with tech startups, we're using new things, and we're going faster than we ever have before.
I do worry, just one quick comment, I do worry that that's often the weak point for cyber attacks is, the more partners you have, the more points of failure you get. And it just feels like, that's a bit of a watch out. Do you agree?
I'm not so sure of that. I think there's enough safeguards being built in, and I think the industry has become quite, I think the work they've done has really enhanced cybersecurity. I think sort of, we've had continual, breaches over the last 3 or 4 years. I think the industry is really sort of on top of a lot of this. I think maybe one of the related issues that we've been talking about quite a bit recently is around data and privacy, and the actions that retailers have to take to really sort of ensure that they are doing the right thing, being ethical, and managing this data in the right way, whilst consumers are saying, give me more personalization, but then don't do it with my data. So it's an interesting balance that the retailers have to achieve in that space.
Sure. So I think if we were having this conversation 4 or 5 years ago, and we were looking at, let's just say sort of broadly, the world of online grocery, we were living in a world where the channels were pretty separate. People were building out dedicated fulfillment channels, not using the stores very much. Lots of these quick delivery companies, many of which have gone away. To shifting to a world where the stores have struck back, as I like to say, and that we're in a more hybrid world. Also, say 3 years ago, we've got 10 years of online growth in 10 weeks. And now we're in a kind of world where a lot of the growth seems to be moderating. So I wonder if each of you, that was a very long question where I'd love a short-ish answer, but maybe kind of your perspective on where this world of seamless, I like to call it harmonized or whatever, retail is going, and the role of digital in the online or in the grocery experience more broadly. Lindsey, you have a relatively quick take on that?
First, I don't think that we will lose traction in digitization of grocery. I think in this space and in retail at all, we're really looking at the long term being the growth of digital. So I do think we've taken a step back post-COVID. There were some demands on the market that required that to be the case sooner. We have declined in that space. I don't think we're going to see them being unique and separate, though. I think now the rise of digital will be in phygital, physical and digital being combined together. I'm going to
stop you there. That's my least favorite word. But you're here. I'm going to be polite. So keep going.
Well, rather than politeness, I will say my view is that this is the future. The future is that we're combining these environments. There is no shopping experience that happens physically where the consumer doesn't have technology accessible to them. Right. Whether that's through things that are, put into the store on purpose, like having smart carts and the use of those through stores and how they're creating efficiencies, or whether that is, media on the carts or on the refrigerators themselves, or whether that's simply in the consumer's hand. We're going to see more digitization of physical spaces. Right. And if phygital is not the right word for that, then certainly the combination, the unification, the convergence of commerce is.
Right. Okay. Fair enough. How about you, Stewart?
I think specifically on grocery e-commerce, I think, what we've seen is there's some realism being applied to this model right now. So, you talked about quick commerce and 15-minute delivery. It came, it's gone. I don't think it's coming back anytime soon. And we've seen that both in the US and in Europe as well.
Turns out the more you sell, the more you lose. Eventually, you run out of cash, right?
Yeah, there's challenges with that e-commerce model, and we're seeing retailers taking different strategies to address that. So if you look at the growth of retail media, that's part of the solution. So retailers typically lose a 2% net margin on, in the best case, with a grocery e-commerce delivery. But when you add in the retail media income, you can actually get to a profitable solution overall. But I think, retailers are very much more pragmatic around chasing that channel growth. The growth has definitely slowed. I wouldn't say it's plateaued. It's slowed. We're still trading against some variables from last year where there were some lockdowns and different COVID impacts. I'm looking forward to next year to really get a clean read. Hopefully, there's no more of these events. We just don't know. But hopefully next year we'll get a better read on where the channel is growing. But some of the heady numbers that were sort of even pre-COVID, I think were pretty optimistic, and those are really sort of, the growth is slowing slightly, but I agree.
But at a much higher level than...
We're at a higher level. It'll continue to grow, but definitely not the race we've seen over recent years. And, shoppers have more choices in this space as well, and will continue to have more choices. That will grow the pie as well. So we're still very early in the days of social commerce. It doesn't really happen in grocery too much yet, but that's, again, another trend that we're looking at as well.
Yeah. So let's talk just quickly, if we could, about retail media networks. One of the hot topics certainly here at the conference. Lots of great growth numbers, though from a low base. What's your view of whether this is the next great thing, or perhaps there's some complexities in taking it to the next level? What's your take?
It's still very early days. It doesn't feel like it sometimes. It feels like we've been talking about it for a while. There's some really interesting developments happening. I think the challenge for the retailers is now manufacturers have so many options in front of them. So in the early days, there was 3 or 4 companies doing this, and it was easy to sort of prioritize, okay, we'll put our investment dollars behind this platform. Now, I think there's 2 or 3 being announced at the show this week. There's just so many endless opportunities and options for manufacturers to invest that now they really do have to make choices, and they will prioritize based on the returns they're getting from those different platforms. What are they getting back in terms of data transparency, standardization, attribution, ROAS? All these measures are going to be increasingly important because manufacturers will have to make choices. And I think the other watch out as well is whether the investment funds from the CPGs, is it new money, is it incremental,
right,
or is it just a switch of spend? But I think it's going to play an important role. And the one area we're watching pretty carefully now is the role of digital media in-store as well. We're seeing quite a rapid rollout of screens with several retailers, both in North America and in Europe. That's going to be a big play in the future as well.
Let's wrap up with a kind of an omnibus little short question. What do retailers need to be thinking about or have on their radar screen that they're maybe not thinking about today? You guys both work with such a great group of organizations, so you hear a lot. Lindsey, what would you suggest to retailers? What should they be thinking about that maybe they're not? Maybe it's off their radar screen.
Well, I think that there's so many things that we could mention. We could talk about generative AI and how you need that new technology. We could talk about operational efficiencies and what you need to do with automation. We could talk about the investment in retail media and how you're creating an environment where others have something that you're servicing them. But I think the net is that we're talking about offering new subscription services and new service models as retailers. We're changing the path of what retail means to include more of a diverse set of products that we sell to consumers. And I think that is a future of retail that we're pursuing as we go into the next 3 years.
All right, Stewart?
Yeah, I would build on that and also talk about some of the B2B models that the retailers are developing. So retail media is one of them, but if we look at, I always hold sort of Walmart up as a bit of a best-in-class example here in terms of commercializing their technology services, commercializing their logistics services, financial services, healthcare, all these different platforms. Yeah, and some of the retailers will actually move to that full ecosystem model. So we're familiar with Amazon and Alibaba as being ecosystems. We haven't seen that full transition from a traditional retail to that ecosystem model yet. I think Walmart is closest to achieving that. But even if you don't go all the way towards full ecosystem, there are other opportunities to make money. There are some scalable, high-margin opportunities beyond retail media, and I don't think all of them are yet on the agenda or on the radar for retailers.
All right. Well, Stewart, Lindsey, thanks so much for joining Steve and I in the Vantage podcasting studio here on the Remarkable Retail Podcast. Real treat to listen in. It's such experience, and it's great to have folks at the table who are talking to all these retailers and getting that kind of broader sense. So thanks again for joining us and taking the time here at Grocery Shop.
My pleasure to be here. Thanks for having us.
Yeah, thank you.
If you like what you heard, please follow us on Apple, Spotify, or your favorite podcast platform so you can catch up with all our great episodes, including renowned author, entrepreneur, and leadership teacher Seth Godin, talking about his incredibly timely and urgent book, The Song of Significance, a new manifesto for teams. And be sure and drop us that 5-star review where you listen to your podcasts. It really helps us spread the word.
And I'm Steve Dennis, strategy and innovation consultant, keynote speaker, and author of the best-selling book, Remarkable Retail, How to Win and Keep Customers in the Age of Disruption. You can learn more about me at stephenpdennis.com, and be sure to follow me on LinkedIn, Twitter, Threads, and Instagram.
And I'm Michael LeBlanc, consumer retail growth consultant, keynote speaker, producer, and host of a series of retail trade podcasts, including this one. You can learn more about me on LinkedIn. Safe travels, everybody.